Hello everyone, how's it going? In this video, we're going to talk about Mullen Automotive, trading under the ticker symbol MULN. So the stock has gathered certainly a lot of interest and talks and conversations from retail traders and also some media outlets. So in this video, we're going to take a look at the title and to see if we should buy them or not. So basically, Mullen is an EV company. It has several holdings under its belt from previous purchases. This is not the first iteration of the same venture. The company had other names before, and so far none of them have been profitable. It seems to have like a checkered reputation, at least from what Hindenburg Research has been suggesting. Of course, Hindenburg Research has been suggesting many things. Some of them turn out to be, widely accepted, widely acclaimed, sort of whistleblower type-ish stories. Others were not affected. Like one example that comes to my mind regarding things that were really widely accepted theories has been Nikola, NKLA. Now, another company that they have said that it's basically a scam, but nothing panned out of it, is Candy, I think it's KNDI. It's an EV company. And, so it's really sometimes hit and miss. And remember, Hindenburg Research shorts companies for a living. Okay, they don't just put out those reports for no reason. And the other reason why people kind of believe that Mullen has a checkered reputation is, I think, the owner himself. Like, basically, Mullen faced like delisting from NASDAQ. The control of the company is in the hands of its CEO and some of his friends. There have been pretty dodgy decisions before to like increase the number of shares circulating, to give themselves more voting power, so on and so forth. They've been saying that, oh, we're going to disclose like key partners, key clients, and they haven't done it when the date came around. The company that manufactured batteries for Mullen went out of business, so on and so forth. Like, there's a lot of those kinds of noise around Mullen. I'm not saying that any of them has to be true. I'm just saying that there's a lot of smoke for any claim that there's no fire. So right now, Mullen is trading around, 20 cents, and it faces delisting from NASDAQ eventually. At some point, they're going to have to do something, either take on more debt, dilute the shareholders even more, or reverse stock split. And reverse stock split never helps the trading, like the share price of a stock. On the other hand, I don't think that they have that many assets to take on more debts. And the dilutions have really tested the shareholders' patience and limits to a dangerous extent. So, in my opinion, given all this, Mullen is mostly a company that's good for trading. It has high volatilities. It has, large short positions. So there are potentials for short-term stock-based reactions. Do I really recommend, Mullen for anything else? It's kind of really playing with fire, to be honest. So the current price action of Mullen is trading around 23 cents. It's been up by like 1% compared to the previous day. Of course, at this point, I'm not so sure that these increased percentages are that significant. They're down by 20% over the past 5 days, up by 15% over the past month, and down by a whopping 84% for the past 6 months. So the narrative surrounding Mullen is modified in a gradual manner. It used to be battery related. Now it's about, potential distribution contracts. Well, not actually potential distributions, but the IGO distributions are supposed to happen now. And I look forward for Q1 2023 to see whether they have any sort of, impact on the bottom line. In fact, you know what? Not even the bottom line, maybe the top line to begin with. Whether they have whether they have new clients, and most importantly, if there's any movement regarding the short squeeze. So with the percentage of the retail traders, Mullen is clearly not perceived by the institutions as a potential investment target. Like, we don't always need lots of institutional traders or institutional owners, but it's worth pointing out that most people see this as a trading play either way. So regardless of whether there's a lot of institutions participating in, I think that this is the approach that most people have, and this is also the approach that I'm going to take regarding Mullen. Now, do trading opportunities exist? Of course they do. As the stock has been hesitating to go lower over the past month. Like, basically for me, the lowest that it's willing to go is 19 cents. Now, remember, shorts have to eventually redeem as well. And this is why there's such an appeal to buy now and to just wait for a massive redemption. Of course, we still have some potential hurdles ahead. For example, what's going to happen when they're forced to dilute once again? Once they're forced to reverse stock split and then it backfires to them, because it usually does. Okay, so there are still risk factors, but I'm just saying, right now, the stock kind of hesitates and doesn't want to go below the 19 cents. So if you buy it now at 23 cents, your risk, I think, is around 4 cents. Okay, so if this is tolerable for you, then go ahead and buy it. My overall recommendation is that Mullen is not really ready to be an investment for anyone, but as a trading stock, it's interesting. So the current price level suggests that the bottom has been found. It can afford to wait for redemption, and it should it should occupy a marginal position in your portfolio and not to tip over the overall balance. So the maximum exposure I would recommend is around 1% of the portfolio's capital.